Welcome back. Lesson 6, market manipulation. In this video, we're going to cover how prices of stocks are manipulated by financial market players. In the prior video, I gave you an example of a company that wanted to expand its business, and he made an offering which caused the price to decrease. And then subsequent, 4 months later, it gave good news, positive news about the expansion and the profits, and it caused the price to go back up. And that's a market cycle for a specific instrument, in this case, the company in the example. Now I'm covering the manipulation of the market by the market players. In the prior example relating to the company, that's a type of manipulation. There are other manipulations involved. There may be pension funds or investment managers. They want to change positions in their portfolios that are substantially large in volume for a specific instrument. For example, let's use the same company in the prior video. An investment manager finds out about the expansion of the company prior to the company making it public. Somehow, they do research, who knows? And that investment manager, because their portfolio is so large, they start selling ahead of time. That causes the price to decrease as well. Then other investors, they see the price decreasing, they immediately jump in out of fear. And then you have other large investors buying more. Another scenario can be an institutional investor wants to buy that company but cheaper, and they're gonna sell a portion of the portfolio just to cause the price to decrease. And then other investors, they see the price decreasing, they get scared, and they start selling as well, which causes the price to decrease even more. And as the price decreases to very low levels, the same large institutional investor starts buying it back in because they wanted to buy more shares at a cheaper price. Then you have the investors seeing the stock going back up, and they jump in out of fear, out of greed, because they want to make money. And the cycle continues. It's the essence of manipulating the market. Now, a retail trader has to be cognizant of all these market movements and manipulations that take place. You have to understand that there are large portfolios that it takes certain investors days or hours and hours to be able to sell. It's just impossible to sell all at once because there's not enough liquidity at time for the stock. And that manipulates the price as well. So as a retail trader, for you to have an edge, you have to understand why certain movements take place, so you can build your edge that can really benefit you when you're day trading. Thank you. If you haven't subscribed, please do so. If you like the content of this video, please smash that like. Until next time.